For 20 years, Roomba was the king of the American home. It wasn't just a vacuum, it was the future. It was the first robot we actually invited into our living rooms. But today, April 13, 2026, iRobot is officially a ghost, with its stock cancelled, headquarters half empty, and its new owner is actually a Chinese conglomerate called Paisia. The question remains, how did a $1.7 billion American icon end up in a Delaware bankruptcy court sold for spare parts? Most people blame the competition. They'll tell you that Shark or Roborock simply built a better mop. They're wrong. Today we perform the autopsy on the government's biggest mistake, the $1.7 billion murder of iRobot. This is how an empire ends. Not with a bang, but with a Chapter 11 filing and a NASDAQ delisting notice. On December 22, 2025, iRobot, a company once worth billions, was wiped out. 40 million homes have these robots, but the company that built them has officially flatlined. The media says it was a failure to innovate. They say the market moved on. But when you look at the forensic evidence, a much darker story emerges. Today, we follow the money from a failed Amazon lifeline to a 46% government tariff, and finally to the ultimate irony, the Chinese takeover that regulators claimed they were trying to prevent. To understand how iRobot died, you first have to understand the moment they were almost saved. We have to go back to August 2022. iRobot was at a breaking point. The post-pandemic world hadn't been kind to them. While everyone was stuck at home in 2020, they couldn't make Roombas fast enough. But by 2022, the supply chain was a mess, inflation was soaring, and consumer spending was cratering. Enter Amazon. In a move that shocked the tech world, Jeff Bezos' empire offered a staggering $1.7 billion to buy iRobot. At $61 per share, it was a massive premium. For iRobot, this wasn't just a corporate merger, it was a desperate heart transplant. They were a hardware company in a software world, bleeding cash, and fighting a losing battle against cheaper, subsidized clones from overseas. Amazon was the perfect match. They had the AWS servers to make the robot smarter, the logistics network to crush shipping costs, and the prime marketing machine to ensure a Roomba was in every single deal of the day slot. It was the only way an American hardware pioneer could survive the onslaught of global competition. But the moment the ink was dry on the offer, the sirens started blaring in Washington and Brussels. The Federal Trade Commission, led by Lina Khan, and the European Commission immediately opened in-depth investigations. Their argument sounds noble on the surface. They claimed that if Amazon owned iRobot, they would have an unfair advantage. They feared Amazon would prioritize Roombas in search results, or more famously that Amazon would use the Roombas, mapping data to spy on the inside of your home. The audit has found that while regulators were busy chasing headlines about big tech overreach, they ignored the basic financial reality of the company they were supposedly protecting. They spent nearly 2 years reviewing the deal, dragging iRobot through a regulatory purgatory that drained their remaining resources. Here's the part the news didn't tell you. During those 2 years of investigation, iRobot was forbidden from making major strategic moves. They were stuck in a standstill agreement. They couldn't pivot, they couldn't find other investors, and they couldn't stop the bleeding. In January 2024, the regulators finally delivered their verdict. They didn't even have to officially block the deal. They simply made the path to approval so narrow and so expensive that Amazon walked away. They paid iRobot a $94 million breakup fee, but for a company with $500 million in debt, that was like putting a band-aid on a gunshot wound. The regulators stood at the podium and declared victory for the consumer, but they didn't save the market. They just ensured that iRobot wouldn't be around to compete in it. By saving the company from Amazon, they handed it a death sentence. When the Amazon deal collapsed in early 2024, the world watched iRobot's stock price fall off a cliff. But while the headlines focused on the failed merger, a much more silent and deadly predator was already circling the company: the tariff trap. To understand this, you have to look at the geography of manufacturing. For years, iRobot, like almost every other tech giant, relied on Chinese factories to keep their costs down. But as trade tensions between Washington and Beijing escalated, iRobot tried to do the right thing by American standards. They began aggressively moving their production lines out of China and into Vietnam. They wanted to de-risk their supply chain and escape the heavy 25% Section 301 tariffs that were crushing their margins. It should have worked. On paper, it was a brilliant strategic pivot, but the audit has found that iRobot walked straight out of the frying pan and into a blast furnace. By 2025, the US government, the same government that had just blocked their $1.7 billion lifeline, tightened the screws on Southeast Asian manufacturing. Citing anti-circumvention rules, they hit Vietnamese imports with a staggering 46% tariff. Suddenly, iRobot was being charged nearly half the value of every single Roomba they brought back into the United States. Think about the math for a second. You are a company with no CEO, you've just laid off 50% of your workforce, your R&D budget has been slashed to zero, and now the government is demanding a 46% tax just for you to sell your own products to your own citizens. It wasn't just a hurdle, it was a mathematical execution. The financial bleed became an arterial spray. By mid-2025, the quarterly reports looked like a horror movie. Debt had ballooned to over $480 million. Their cash reserves, which had sat at a comfortable $200 million during the peak years, had evaporated to just $24 million. In the world of global hardware manufacturing, $24 million isn't a war chest, it's pocket change. It wouldn't even cover the payroll and electricity for a single month of full-scale operations. While the audit shows that competitors like Roborock and Dream were being subsidized by their home governments, iRobot was being penalized by its own. Every time a Roomba bumped into a wall in an American living room, the company was losing money on the transaction. By the summer of 2025, the stock price, the ultimate pulse check of a company's health, had flatlined. It dropped from its all-time high of $120 to a measly $15, and then kept sliding. Institutional investors who had held iRobot for a decade began dumping their shares in a blind panic. The headquarters in Bedford, Massachusetts, once the crown jewel of American robotics, became a graveyard of unreleased prototypes. The engineers who stayed behind described a ghost ship atmosphere. They were building products they knew would never see a retail shelf because the company couldn't afford the shipping containers to move them. The regulators in Washington claimed they were protecting the market from a monopoly, but the forensic evidence shows they were actually creating a vacuum. And as we know, nature and the global economy abhors a vacuum. Someone was waiting in the wings to pick up the pieces, and it wasn't another American innovator. It was the very entity the government claimed they were protecting us from. The ultimate irony of the iRobot story is that the regulators' fear of big tech ended up delivering the company directly into the hands of a foreign power. To see how it happened, we have to look at the one group iRobot couldn't afford to ignore: their creditors. By late 2025, iRobot wasn't just losing money. They were physically unable to pay the people who built their machines. Their largest creditor wasn't a Wall Street bank or a venture capital firm. It was their long-term manufacturing partner, Shenzhen Paisia Robotics. As iRobot's cash reserves dwindled to that dangerous $24 million mark, they defaulted on nearly $100 million in payments to Paisia. In the world of international manufacturing, debt is the ultimate leverage. Paisia didn't need to sue iRobot in an American court. They simply stopped the assembly lines. But they went a step further. Under the terms of their manufacturing agreement, terms iRobot had signed in a moment of desperation, Paisia had the right to convert that unpaid debt into equity if iRobot couldn't meet its obligations. On January 23, 2026, the hammer finally fell. Paisia Robotics officially exercised their rights and acquired 100% of iRobot. The pioneer of American consumer robotics, the company founded by MIT scientists, was now a wholly owned subsidiary of a Shenzhen-based conglomerate. The audit reveals the true cost of this regulatory failure. The FTC and the European Commission blocked Amazon because they were terrified of an American company having access to your home's floor plans. They spent years arguing that Amazon might know where your kitchen table is or how often you vacuum your bedroom. They called it a national security risk and a monopoly on privacy. But look at where we are now. Because the Amazon deal was blocked, those same floor plans, that same navigation data, and the microphones in millions of American and British homes are now technically under the control of a company governed by Chinese data laws. The very data the protectors claimed they were guarding was handed over to a foreign entity because they preferred a bankrupt company over a successful American merger. The fallout was immediate. On February 12, 2026, Paisia began the integration process. They didn't just keep the status quo. They moved the remaining engineering roles to Shenzhen and downsized the Massachusetts headquarters to a small sales office. The intellectual property, the patents for the mapping software, the object recognition AI, and the battery management systems, is no longer American property. The irony is a bitter pill for the tech industry to swallow. The regulators claimed they were saving the market for the next big thing, but all they did was clear the field for a state-subsidized takeover. They didn't stop a monopoly, they just ensured that the monopoly wouldn't be an American one. As we move into the final audit of this corporate execution, we have to ask the hard question. Was this an accident of bureaucracy, or was iRobot simply the first sacrificial lamb in a new dangerous era of government-led business destruction? As we sit here in April 2026, the dust has finally settled on the iRobot carcass and the view is grim. This isn't just about one company that makes vacuums, it's about a fundamental shift in the global tech landscape. The audit shows that the iRobot execution has sent a chilled shockwave through every venture capital boardroom from Silicon Valley to London. For decades, the exit was the engine of innovation. An entrepreneur would take a risk, build a company, and then sell it to a larger player like Amazon, Google, or Microsoft to scale the technology. But now, that path is blocked by a regulatory wall. If the government can decide that a $1.7 billion deal is a monopoly, even when the target company is weeks away from insolvency, then no hardware company is safe. The data from the first quarter of 2026 reveals the iRobot effect. Investment in American hardware startups has dropped by 34%. Why? Because investors are terrified. They know that if they fund the next big robotics or smart home company, the government might refuse to let them sell it, effectively trapping their capital in a dying business. We are watching the slow-motion deindustrialization of American tech, driven not by a lack of talent but by a surplus of red tape. And what about the consumer, the very person the FTC claimed to be protecting? If you bought a Roomba in the last 5 years, your reality has changed. While Paisia is still pushing out software updates, the innovation has flatlined. The audit compared the 2026 iRobot roadmap to the one leaked before the Amazon deal collapsed. The difference is staggering. The cutting-edge home intelligence features that were supposed to integrate with your smart home are gone. They've been replaced by generic, low-cost features designed to maximize profit for the new parent company. The quality of customer service has plummeted, and the iRobot Safe Data Initiative has become a bureaucratic maze that offers very little transparency. You were told the government was saving you from big tech. Instead, they delivered you into the hands of value tech, where your data is the product and the hardware is just a Trojan horse. The final verdict of the audit is clear: iRobot didn't have to die. It was a healthy, if struggling, pioneer that needed a strategic partner to survive a global trade war. The regulators acted like they were in a vacuum, ignoring the tariffs, ignoring the debt, and ignoring the competitors waiting across the Pacific. They played a theoretical game of antitrust while iRobot was living in a physical reality of bankruptcy. So as we close this case file, we have to look at the bigger picture. Is iRobot the exception, or is it the blueprint? We see the same regulatory pressure mounting against Tesla's FSD, against SpaceX's launch dominance, and against every major American AI lab. If the lesson of iRobot is that the government would rather see a company dead than too big, then the future of innovation isn't just at risk, it's already being dismantled. The Roomba was once a symbol of the future in your living room. Today, it's a forensic marker for a government mistake that cost $1.7 billion, thousands of jobs, and the soul of an American icon. Let me know in the comments, do you feel safer now that Amazon doesn't own iRobot, or do you feel like we just lost something we can never get back? Check out the video above to learn about Tesla's $1 trillion lie. This was the audit. See you in the next one.